Hello and welcome to another episode of Book in the Beano, where we discuss the debits and credits of being an accountant or bookkeeper in the digital world. I'm Kane Munro, owner of Active Outsourcing and Accountancy Online, and with me, as always, is Diane Lucas, superstar bookkeeper, consultant and owner of Direct Management. Di, how are you going?
Good morning, Kane. I'm doing well. Yourself?
Good. How's the weekend?
I had a blast. Lots of activities, lots of fun things. Great weather in Melbourne.
Oh, it is. It is good weather in Melbourne, being summer now. Speaking of things which maybe aren't so great or maybe not as interesting as weekends, today we're going to discuss Single Touch Payroll.
Yippee!
And as an accountant, I have to say that I don't know much about Single Touch Payroll, and you being an expert in this sort of field, I will lean on you heavily. Has it started yet? Is Single Touch Payroll in? Should I worry?
Should you worry? Probably not. Is it in? Yes. All depends on the size of your business.
Okay, so size matters. What size does employers would this be affecting at the moment?
So last year, July 1, effective July 1, the 20 plus employers, so if you employ more than 20 people, Single Touch Payroll came in for those people. And we are now looking in February, so it's almost fully legislated, but that'll be finalised, I believe, in February, which means that come July 1 this year, 2019, all employers will be required to register for Single Touch Payroll and follow the Single Touch Payroll processes.
Literally every employer. So you have one staff member, you have to use Single Touch Payroll every time you run a pay run?
That's correct.
Wow, that's onerous.
Well, yes and no. The processes, or the government's working with the software developers or the vendors who provide payroll services to streamline it and make it less onerous than it probably sounds. For example, the software like KeyPay, it's just another step, one step, hit a button and submit that pay pack or the payroll to the tax office.
Okay, so we're not transcribing things onto paper and sending it to the HR and things like that. It is literally just pushing a button at the end of your normal payroll process, and it's effectively being taken care of.
That's right, and the aim is that it's going to be fully digitalised, so the tax office is not providing the option for a paper submission.
Wow. So what happens at the end of the year then when we get to year end and you've been doing Single Touch Payroll all the way through and you have your 30 June reconciliation where you might be doing a little bit of X and Y to kind of match things up? What does that look like from an accountant or a bookkeeper perspective? Well,
the pay runs themselves that get submitted to Single Touch Payroll through the Single Touch Payroll systems using whatever payroll provider you decide on, are providing year-to-date figures to the tax office. So that means that if there's any adjustments throughout the year, so for example, if you've got a back pay or a bonus or an overpayment and whatever it is, but if your year-to-date figures adjust for whatever reason from pay date to pay date, then it's those year-to-date figures that are submitted to the tax office each time a Single Touch Payroll is submitted. So at the year end, it should be as simple as, finalise your pay run for the June 30, and that's the finalisation of the pay cycle for that financial year.
Okay, so does that mean W1 and W2 will disappear from activity statements?
They'll be populated.
Oh, pre-populated. Wow, so
that's the plan.
PAYGI, PAYGW will be on, then we'll just be looking after GST.
That's correct. So
this is good news to me.
Well, you'd think so, but there's a bit of some concern in the market, I think, on it's taking away some of the work that people like us do, which. Yes.
When you're doing more work during the pay run, because you have to make sure the pay run's right, you then have to do that.
The balancing and everything occurs there.
A little process at the end of each pay run. So while you might not doing that bulk work at every quarter, you've got that pay-based one every time you do it. So
that's
it's different. It's more. I would have thought that was instead of really lumpy sort of work, it's a more smooth.
It's taking the emphasis off the year-end process, isn't it? It's making sure that, well, even if, as I said before, if the accuracy isn't there in that particular pay run and there's adjustments made, well, it's almost like a self-correction because it's a year-to-date figure that's submitted.
Yeah, well, I'm thinking from an accountant perspective here that we have some clients where we assist with sort of tidying up things before stuff are lodged. But we have a number of clients who have probably less than under 20 employees who do a lot of their pay runs and their bookkeeping in inverted commas themselves. I can see this being really hard for a business owner trying to do their own books to, make sure their pay run's right.
Well, yes, and again, that's where I guess the working with an advisor to make sure that those corrections are in place before the year-end process. I don't think any of that sort of due diligence changes whether you're a business owner or a bookkeeper working for a business firm. So the due diligence to make sure things are correct is still paramount. And as I said, if it's a correction throughout the year, great. Otherwise, it's a year-end correction.
Okay. Do you think from an ATO perspective this is also, I don't say revenue raising, but ensuring they're getting enough tax withheld through the year?
Yeah, there's some actually really good benefits to it, I think, from an employee perspective. So a lot of employees may hold down more than one job. So they might not know to actually withhold extra tax from their wages. And so by having their wages submitted throughout the year, then the tax office is doing their reconciliations at their end. So the plan is that they'll be able to advise an employee that, hey, look, you're not withholding enough tax. You might want to talk to your HR representative and then withdraw more tax or whatever out of your pay. So I think that's a great thing. There's also obviously the benefits of it connecting back to the Centrelink houses, so that people who are receiving benefits, correct wages are actually captured, so that Centrelink is then actually providing payments correctly. Superannuation is the other big one, so there's cross checks and balances against all the superannuation houses, so that when an employer is probably a bit reticent in paying their super, it's captured faster than it is currently. So the onus again is on the employer doing the right thing. And given that that's something that an obligation that an employer should be doing anyway, and many of them aren't, it's a good thing.
I can see a lot of benefit for an employee at the end of the year. Now, we have a lot of sort of low-fee individual clients who are primarily employees with a couple of deductions who'll come in and they'll just go, okay, why am I tax payable? I'm like, well, when I say come in, they do it over a video consult at best. So why is it tax payable? I go, well, you've probably had 2 jobs over the year, haven't you? And they're like, yeah. Well, that's why. It's got nothing to do with us. We're not magicians. We can't magic up a tax refund for you. You've not had enough tax withheld during the year. So will that change now? Employees will have control over that. And then what will happen? Will there be a payment summary or a group certificate provided now by employers? Yeah,
so the very final pay run of the year is now called a final event, and that when you've processed that pay run in a single touch payroll environment, you tick a box which signals to the tax office that this is the final pay event of that particular entity for the year. And once that final event has triggered, then that should automatically generate what we call income statements now. So it's not going to be a payment summary or a group certificate. So if you're still using those old terminologies, you need to refashion your mind and think about income statements now. So what should happen in the Single Touch Payroll environment is through MyGov, an employee can then jump on there literally, effectively, it should be the first week in July, and download their income statement, which they can then take off to get their tax returns done.
I expect an influx of clients in the first week of July then just wanting their, hopefully, tax refund.
And I'm not even sure if download's the right word in that environment either.
No, I don't know how we'll get access to that then, because this is an interesting one. What are people going to print out and put in their shoebox to bring in?
Well, they might have to just get a smaller shoebox, maybe a cigarette box.
Well, the pre-filled data that the ATO provide now is really good. So it'll actually flag if there's somebody sold a property as rental stuff as well. So I'd imagine that's going to be available much earlier in the year from an employer perspective as well. So if you are just an employee and you've just got a few deductions, you might be able to get your tax return done, your tax refund paid to you by sort of mid-July.
Yeah, totally, and that's the game plan, that's from my understanding. Then there's other aspects to consider as well from an accountant bookkeeper perspective as well with regard to Single Touch Payroll, and that's our engagement letters. So one of the things as a bookkeeper, what we've just done, or come at the end of January, is when we reinstate all our bookkeeping engagements, and we've actually updated our terms of engagement to reflect a single touch payroll aspect. So although it's not 100% legislated yet, we believe that it's effectively going to happen. And so the engagement letter that we've modified includes a paragraph to the lines of that payroll will be submitted to the tax office on a regular basis.
Very diligent with your engagement letters, Di. What process do you use to update those?
Well, we use our Practice Ignition for our engagement letters.
Gratuitous plug there for Practice Ignition.
Oh, we've been using it for years. We love PI. And so, yes, we've just had to update the background there for our templates, and then they automatically suck through. So my updated engagement letters are...
They're going to include Single Touch Payroll references.
Absolutely. They need to include it because it's a separate submission to the tax office that we're doing on behalf of our engagements.
Will this increase the scope of engagement now? Will it, in theory, increase the price that you charge clients?
Well, yes and no. I mean, the implementation of Single Touch Payroll into the rest of the setups and everything like that, yes, there's a bit of time involved, especially if it's not a dedicated cloud-based program. So some of the packages out there are using a third-party process, and that setup is a little bit more onerous than if it was a direct connection. So what we're not actually charging extra, I don't think, really, in that regard, because our bookkeeping engagements are package based anyway, and once it's all set up, it is literally, another 30 seconds. It's not a big deal.
So do you think this will be another enabler for clients to move to the cloud-based software as well? They're in that, their package might not do Single Touch Payroll effectively or efficiently, so then moving to a cloud-based one, which is going to work with Single Touch Payroll, will make more clients move to the cloud?
Yeah, I think it's a really good opportunity for accountants and bookkeepers alike to actually have that discussion now with your client base. So whether you're well, for us, we're already down that pathway. We don't have clients doing manual processes, but we'll have prospects that come and talk to us, and we'll move them to a cloud environment. But if you've actually got clients that are using spreadsheets or other processes that aren't necessarily capturing the relevant data that you need to do a Single Touch Payroll lodgement, then it's a great opportunity to move them forward into a compliant package.
Surely there's not clients out there running payroll via Excel?
Yes, absolutely.
Really?
Yeah. I mean,
it's 2019 people.
I've got one at the moment who is still coinciding her pay run events, because I've just put her onto QuickBooks, but she's not sure because she's been doing a manual book for forever and a day, and so she's still recording her pays, for 15 employees manually, and then cross-referencing it back to the process. And we've done probably 6 months worth of payrolls now, but she's still not prepared to let it go.
I wouldn't even know how to use Excel to do something. I'd be like trying to go back and use an analogue phone to make a phone call die.
Or wind down your window with a winder.
Exactly right, exactly right. I remember those from when I was growing up as a kid, but if you show me how to use them, I'd probably know how to use them, but geez, using Excel to do your pay run.
Yeah, no, it's and that's the other part too, is the moving into an environment where the pay package, the payroll package, is a dedicated payroll package, removes error.
Yeah.
Simple.
Yeah. So for the bookies and the accountants out there, what are some of the steps? You've mentioned updating your engagement letter. You've mentioned making sure the client's got software which will ideally assist on Single Touch Payroll. What are some of the other steps out there for bookies and accountants to take before it is implemented at 1 July for every employer out there, which will assist them streamline this process? Communication.
Now's the time to start talking to your clients and saying this is going to be happening. So that'll be one of our tasks for January, February, which is then sending out, or pretty much get it ready so that when February happens and it is legislated fully, that we'll be ready to go with an email campaign to our client base saying that this is happening, this is what you need to do, or rather, this is what we'll be doing on your behalf, and then finalising it that way. But the other part too is having the employer communicate to their employees that this is the sort of thing that's going to be happening, and assisting the employees to understand that if they don't have a MyGov account, then MyGov is going to be the best way for them to actually access the data. So there's pay slips, payment summaries, those sort of things, they can access them through the MyGov account.
There's a lot of good stuff on MyGov, and the ATO aligning MyGov with their tax product as well, and the way that integrates is really good for people who are doing their own tax returns. So it's really important that if you don't have a MyGov account that you set up, because there is a lot of stuff which flows through there now. Your notice of assessment goes through there. There's no more paper notice of assessment. So it's almost like the ATO and the government are moving towards a paperless environment by stealth.
Yeah, that's right. So there's obviously still people out there who are doing manual BASs and IASs and things like that, and capturing those returns manually. And the the hope is that those sort of businesses will actually be steered towards a digital environment as well. There is obviously some issues with regard to single touch payroll in environments too where digital access is limited. So we've got businesses that are unable to really access great internet services, or we've got businesses who are just pretty much a mum and dad employer.
The NBN solves all this, doesn't it?
NBN, what's that?
The no broadband network.
Yeah, so there are people out in the country and people who don't necessarily use Telstra, so they're not always got that strong internet connection.
But there's ways around that for them. So there's concessions around that.
That's right. There'll be concessions, and then the other part is so if you've got less than 4 employees, the micro employees, there'll be concessions around how they be able to lodge. So it might not necessarily be for every pay event, but a more regular basis centred around their BAS lodgement returns. And the idea is really to assist these people to become digitally connected and to do those returns that way.
Yeah, so again, it's one of those things where when it's released, people kind of throw their hands up and go, oh my God, you can't do this, it's going to be terrible, right? But it actually works out that everyone's kind of probably going to benefit from this in some way. The employer, the employee, and bookkeepers and accountants. It's like, I don't think there's such a thing as a win-win-win situation, but yeah, it sounds like there's a benefit in this for a lot of the stakeholders.
I think like everything, the change kills some people. People just to go, oh my God, there's change happening, I'm not happy. Whereas, yes, there's always a little bit of pain when change happens, but it's not going to be too onerous, I don't think. And as you said, there's a lot of benefits in it for people. So, let's get on board and behind it and support what's going on, because I think the benefits are going to outweigh any of the pain.
Yeah, and the government aren't going to change.
No.
They're not going to then come and knock it on the head, or they could, but it's government. You never know what's going to happen to them. But they've committed to this, and they're committed to kind of going paperless within the ATO now as well, and they're redoing their tax portal to make it easier for tax agents.
Which will be very exciting when that finally happens.
Yeah, so there's a lot of cool stuff in the digital realm that is happening now. It makes a lot of sense for accountants and bookkeepers out there to embrace it.
Absolutely, and look, I look forward to it. And change can be difficult, but let's embrace it and go forward, and we'll all be better off in the long run.
Agreed, Di. That's all for today at Book in the Beano. We'll be back soon with another episode. So until then, stay accurate.
Bye-bye.